So that's the roundup of the market. But to weigh in more on the markets and what are the levels to keep on your radar, we are now joined by Rohit Srivastava, who's the founder of Strike Money Analytics and India Charts, now joining us. Hi, good afternoon, Rohit. Thank you so much for joining us. Rohit, we are continuing with the last week's momentum. It is a quiet day, but the banks are firing on all cylinders. Tell us on the Nifty bank, what are the levels to watch out for? And on the Nifty also, we are managing to sustain at least above the 25,900 levels from here on. By the end of this week, what are the moves that we can expect and what are the levels we can manage to hold?
So the next level we're looking at for Bank Nifty is closer to around 60,100. I think the key support is going to be the low that we made on Friday. So that is, close to around 58,000. That's going to be the trailing support. It's also very, very close to the 20-day average, close to 58,000, just above that. So 58,000, 58,100, I think, is the support zone from where we should be headed next towards 60,157. That's the number that I see on my screen. So the banking sector basically has been, I think, the top performer, not just for today, but also over a period of time. It's managed to hit an all-time high way ahead of the Nifty. And I think that trend is likely to continue as there's a new sector in which a lot of money is flowing in, given the lower valuations that they ended up at the start of this year.
Okay. Rohit, also talk to us about the sectors here now. The PSU banks are, firing on all cylinders. In fact, PSU banking names have been outperforming for a while. Besides PSU banking names, what are the other pockets that you find attractive at this juncture?
So within financials, I'd actually put the NBFCs, right on top. And NBFCs meaning names like, Shriram Finance, or if you're looking at Bajaj Finance, for example. I think these will probably come on top, followed by PSU banks. So they are the preferred ones. In private banks, I would be very selective. But within the financial space, I think, NBFCs and PSU banks is where the lead is really coming from.
Right. Rohit, also talk to us about the metals, the metal counters that today are reeling under some bit of a selling pressure. But generally, metals have seen a re-rating and metal pack continues to do well. What would be your take on the metal pack?
So you're right, they've done well, and they've done well when the markets were actually having a difficult phase. It's also because the dollar has been weak, which is usually a positive trend, for the metal pack in anticipation of that, and plus to some extent the domestic demand itself, the weak rupee, all of that has played into the Indian metals because globally metal prices had not picked up till a few months back. But our metal stocks were still doing well because our pricing got support from a weaker currency. But now we're at a point where you're actually beginning to see another round of weakness in the dollar. You're also seeing aluminium prices at a multi-month high. And these are trends that are probably likely to continue. So that means that metal stocks will remain bullish. Within that, I would say that steel prices have been the weakest. They've actually not yet started to pick up. But we would want to buy them on decline simply because they did well when the rest of the market was in slack. Now we are seeing a pickup of momentum in various other parts of the market. So it's possible there is some short-term profit booking. But as and when that happens, from a medium to long-term perspective, metals will continue to be a very good investment. So that is how we should really look at it.
All right, Rohit, thank you so much. Metals still continue to be a good investment, and there the market story could remain intact of what is playing out. On that note, thank you so much for taking the time out and joining us. With that, it's time for a quick breather. Don't go anywhere. After the break, we're getting you more updates on the market. Stay tuned.